Hello, and welcome to another edition of CMX Forex News. Alexander Shapiro reporting. Today is July 2nd, 2008. In Australia, building approvals declined 6.5% on the month and are now up 0.2% on the year. Approvals have been down 4 of the first 5 months of 2008 as high interest rates are putting a clamp on construction of new apartment buildings. Retail sales jumped 0.7% in May, beating expectations of only a slight gain. The RBA is expecting the 12-year high interest rate to curb domestic demand and in turn put a lid on inflation. Today's strong retail sales headline will pressure RBA policy members to reconsider their current stance on holding the official cash rate. The Australian dollar rose following its retail sales data as traders factored in the increased chance of another rate hike this year. From a low near 0.953, the Aussie rallied 100 pips to test the 0.965 area. In the Eurozone, producer prices rose 1.2% on the month in May and are up an annual pace of 7.2%, a record for the index which goes back to 1990. Energy costs were the main culprit and are now up 18% compared to last year. The release bolstered the case for the ECB to increase the bank rate tomorrow to 4.25%. The euro finally managed to end its losing streak against the yen, climbing overnight after the PPI data. European stocks were also mainly positive during the European session. At the New York Open, the pair hit an intraday high of 168.6 and receded during the session. After finding support yesterday near 166.3, the euro has rallied more than 200 pips, recovering the ground it lost after last Thursday's slide. U.S. employment weakness persisted in June and even spread to the service industry. The 79,000 job cuts were worse than the 20,000 economists had predicted, plus May's headline number was revised down. Also, the outlook for employment is deteriorating, as shown by recent weaker consumer confidence data. Factory orders in the U.S. increased 0.6% in May, following a revised 1.3% increase. It's a modest gain, but may reflect changes in rising prices for non-durable goods, which were up 1.2%. Orders for durable goods, those designed to last more than 3 years, were flat and capital spending by companies decreased. The euro-dollar pair rose to a 2-month high today as the ADP employment data shows an accelerated pace of job cuts in the U.S. Tomorrow, the U.S. is expected to show the economy shedding jobs for the 6th straight month. Combined with the ECB's highly anticipated rate hike tomorrow, the dollar may be severely tested the rest of the week. Oil prices rose again after U.S. crude supplies fell last week. Inventories have declined 6 of the last 7 weeks. Along with the weak jobs report, the greenback felt the pressure against the Canadian dollar. The U.S. dollar-Canadian dollar pair declined 125 pips from its level prior to the New York Open, testing the 1.01 level at which it opened the week. Overnight, the dollar rose against the yen, following in the wake of the euro. However, the U.S. employment report and increase in oil prices pressured U.S. stocks. After opening higher, Wall Street fell into the red by mid-afternoon. The dollar also fell about 70 pips from its intraday high. The last 3 sessions have seen higher lows from the pair, a sign that the dollar may be regaining its legs after falling steeply last week. A lot will rest on tomorrow's data. Tonight, Australia will post its services PMI and trade balance. Overnight, Switzerland will reveal its CPI and the central bank's monetary policy assessment. The UK will post a measure of housing prices. Overnight, the Eurozone will also post its services PMI along with retail sales for May. At 7:45 a.m. Eastern Standard Time, the ECB will give its decision on interest rates, which will be followed by a press conference at 8:30 a.m. The U.S. will post its non-farm payroll employment data along with the ISM non-manufacturing index. Join us again tomorrow for another edition of CMS Forex News right here at cmsfx.com.